All right. Welcome, everyone. We'll go ahead and put the chat up while we're going live. All right. We got a few more people tuned in. So let's go ahead and get started here. So today we are going to be talking about commercial multifamily loans. So a totally commercial loan for 5, 10, 20, 100, 200 unit properties. A true commercial loan is going to be our topic here. And first, we're going to go into the live rates for today. It is April 13th, just after 11 a.m. So all of our standard programs are live. So let me go ahead and pull up our live pricing and get started. All right, this is our pricing tool for our mortgage professionals. We have over 300 licensed loan officers in 22 states for primary and second homes, and we can do our business purpose loans like the commercial multifamily loans in 44 states. So today we're going to go through the pricing on our general scenarios. If you'd like a full loan estimate, please get with one of our team members. But this pricing tool will show our general rates and APRs for our basic programs for today. And again, it is April 13th, just after 11 a.m. So we're going to check out our live rates this morning. We're going to set up a basic scenario for all of our demos, a loan amount of 400,000, an LTV of 80. We're going to set a desired price of 99. That means we're going to tell the computer to find the best rate for one discount point in cost. Nearly 100% of our requests are to buy down the rate in the last 6 months. So that is the typical request. And we're going to compare our conforming conventional to our FHA, and we will check out our non-QM expanded guidelines where we have over 5,000 additional loan programs that can use alternative income, such as bank statements and other types of income. We will not do VA or USDA. Remember, VA is only for eligible veterans, so if you are eligible, we appreciate your service and would be happy to quote that, but not everybody is, so we don't quote that live. And same with USDA, that's only for a property that is eligible in a rural area. So if you happen to be looking in a rural area, please let us know, and we'd be happy to quote that as well. So we'll start with our conventional conforming loans. We're going to set up a purchase, 30-year fixed standard loan, primary occupancy, single family, 1 unit, state of Florida, county Miami-Dade, estimated FICO score of 760 for all our examples, and an estimated debt to income ratio of 40 for all our examples. So let's check out our live rates this morning. So it looks like we have some downward momentum from earlier this week, which is great. So this morning, our best published rate here at 6.125 for one discount point in costs and an APR of 6.301. Remember, as we go through our demos, you always want to compare APR. That will get your true apples to apples price across different programs. So you see here, our conventional is just below 6.5, right there in the low sixes. So keep that in mind as we compare to our other options. So if for any reason our customer doesn't qualify for conventional, which is typically the first option, the other option we always want to compare is our FHA. So if we set the LTV to 80, everything else will be set the same as our other scenario. And we can quickly check out our FHA rates this morning to compare to what we just saw for conventional. So you see here our FHA rates a little bit lower here, 5.5 rate this morning for 1 discount point in cost and a final APR of 6.102. Remember, FHA does require upfront and yearly mortgage insurance. Those have been reduced recently, so these quotes are much more viable. And in this case in particular, 6.102 is a slight bit better cost in this scenario for a FHA loan compared to a conventional loan. Remember, conventional was 6.3 something on the APR. Here we're at 6.1 something. So definitely recommend our borrowers out there shopping, always compare FHA to conventional because it is a very comparable option where it may not have been previously. Now, if for any reason our customer doesn't qualify for conventional or FHA, typically other banks or lenders may not have other options for them. But here at the Mortgage Calculator, we specialize in non-QM programs, which is listed here under expanded guidelines. So these are our non-QM programs. We'll keep everything else the same. However, you see when we select non-QM, we have a new option. So here under income verification, we can actually change to alternative income here for our scenario. So typically full doc is what would be used for 2 years of tax return. That's what would be used for conventional FHA. So we would typically choose a non-QM option to choose an alternative documentation, such as 1 year alt doc, 2 year alt doc. We have asset related with no employment required. We have business bank statement programs, our investment programs we'll talk about in a minute. And our most popular program for non-QM for a primary home purchase is going to be our personal bank statement 12-month program. That's going to be for our self-employed borrowers, because typically a self-employed borrower, when they present their 2 years of tax returns, may have various write-offs and other reasons they don't qualify for as much income. And in this scenario, we can use 12 bank statements, the most recent 12 bank statements, to determine a debt-to-income ratio using those bank statements rather than the tax return income. So typically for most of our self-employed borrowers, we can qualify for much more income and therefore qualify them where they would not qualify before, or qualify for more loan amount, more income, and therefore the home that they're looking for. So these are programs that are typically solutions to a borrower who would not otherwise qualify. So these rates are going to be a little higher, but we love to present these solutions to borrowers that are in those situations. So let's check out our non-QM bank statement options this morning. Wow, great. We have one below 7 for the first time since we've been doing this show for the last 3 months, right? So, excuse me, the entire time we've been doing this show, rates have been dropping. And remember, non-QM typically reacts a few days later than the conventional. So we saw some conventional action yesterday. We didn't really see much movement in the non-QM, but I'm very happy to report today this option is finally cracking below the 7 on the APR and the 7 on the rate here. So we have a 6.875 rate, 1 discount point in cost. And for the first time in months, we have a non-QM program under 7% APR, which is pretty amazing. So remember, the FHA was 6.1 something, conventional 6.3 something on the APR. And now we can even use bank statements for 6.9 on the APR. So all three options very comparable. Remember, this is a solution, so not much more cost to solve a very significant problem for some borrowers where they would otherwise not qualify at all or not qualify for the home they really want. So we love these programs. Definitely excited today when the rates go down. There's tons of other options here you guys can see, all in the same ballpark, but there's lots of different flavors of these bank statement programs, hundreds of them. Please get with our team. They can navigate which one of these may work best for you. Some of these may allow things like a credit event, like a foreclosure or a bankruptcy and other things like that. So please let us know if you have a specific scenario. Now, before we pass it off to Jose for our example, we always want to do live rates on investment properties as we do every morning. So we'll quickly switch this to investment property, set the same LTV to 80% loan, 20% down payment, and we're simply going to compare our two options for investment properties. We have our conventional options and we have our non-QM options. Remember, FHA, VA, and USDA are not eligible for investment properties, so we'll simply compare these two options. So the first example, conforming conventional, everything else will stay the same in our scenario. So let's check out the investment property rates this morning. As we say every morning, remember the computer is not able to find a combo that's going to give us one discount point in cost. That's sort of the limitations that are on these conventional programs right now. There are pretty exorbitant fees for investment property. So pretty great rate here, 6.625. We'd love to see the rates go down, much better than earlier this week. But the final cost of 3.125 discount points can be prohibitive for some investors. However, this is still a great rate, still a great APR, 6.872. Remember, the conventional primary was 6.3 something. For the investments here, we're at 6.872, so very comparable. Definitely a great option for our borrowers that do qualify. But now our borrowers that may not qualify for a full doc or would like to explore other options, such as our heavy investors with multiple properties, our non-QM Dscr. Let me set this up the same, 80% loan to value. We'll set this to non-QM. And our most popular program here for investment properties for non-QM is going to be our Dscr program. That's because it doesn't require any income from the borrower. We're simply going to use the estimated rental income from the property to determine if that covers the mortgage expenses, the PITIA of this mortgage we're looking at here for this proposed purchase. So pretty simple. If the rents can cover the expenses, the ratio is greater than 1, and we have a plethora of options there for Dscr is greater than 1. We even have options for Dscr ratios under 1, which means the property doesn't quite cash flow there to meet that mark, and we still have options for that. So the other option we do have to set is our prepayment penalty. We always set a 3-year for our non-QM investment properties. That's the standard. However, we can select 0 if we'd like. That will limit our loan programs and cost more money. We could also select 5 years, which will again limit our loan programs a little bit. Not everybody offers 5-year, but it will cost less money. However, the most common is 3 years, so that's what we always select for our show in the morning. And let's check out our Dscr rates. So great here. As I say every morning, we love to see options in the 7s. So again, as we've gone through these higher rate environments, it's been nice to see the non-QM come down. These Dscr programs have been in the 8s. Now we have some great 7 options. And I believe there even might be some 6 options with the buy down. So amazing options that we have here now. So the best option the computer found, 7.75 rate for 0.6 discount points and costs. Pretty amazing there. And a final APR of 7.817. So very comparable here. Remember, these are for investors and that want to save money. Remember those examples with conventional. Unfortunately, they were going to have to deploy $10,000 plus on discount points. Here, only $2,400. So many of our investors, when they compare conventional to Dscr, would love to deploy that extra cash into another investment. So these programs also have a lot of other benefits, such as you can start multiple. So some investors could refinance multiple properties to purchase multiple properties. So a lot of flexibility here. And if we scroll down, you'll see we have hundreds of these programs with various Dscr ratios, various prepayment penalties. Some of these programs at the higher rates may allow things like short-term rental income. So a lot of different options here. Please get with our team to find which one of these dozens of options fit best for your scenario. So that is it for our live pricing here. Let me go ahead and pull up our topic for today. Let me switch my screens. And as I mentioned before, our topic for today is going to be on our large commercial multifamily loans. So that means anything from 5 units is a commercial property to 10 units to 50 units to 100 units and more. So these are basically Dscr products. So we just went through a Dscr example. These are going to be the more higher end commercial version of the Dscr program. We've gone through a few variations of that this week actually as well with our mixed use and our small commercial. This is what we would call large commercial, right? So this is a little bit different flavor of the DSCR, and this is for the very large investors and institutional level investors looking for these large multifamily properties. So Jose, you got a couple examples ready for us there?
Yes, sir.
All right, let's make it big. There you go. Go ahead and take over.
All right. So, following in line with all of our amazing DSCR options, I want to show today our DSCR option that we have for multifamilies 9 up to 100 units. Now, some of the limitations that we encounter with commercial loans of this type has to do with zip codes and population densities. So this option that we offer is less strict with that option, with that scenario with zip codes. It will then take into consideration the market tier that the property is in and then just adjust the loan to value, but not totally deny doing the loan just because of population density. So it is a little bit of a hybrid option. Very good option as a workaround if you're dealing maybe with not a first tier market. Um, it is fully DSCR on this, so it does require 1.25 or above DSCR. But then again, take into consideration the benefit that it offers by being more flexible regarding population density in the area. So in the examples that I have here, I'm using a $1.4 million value. And, in this, let's go first with the purchase option. Okay, so here we have our 20 unit, 75% loan to value. And we're looking at $1,050,000 loan amount, $1.4 million purchase price, 780 credit. And we do see here 8.875 has a lender credit of 1575, and you can buy it down to 8.125. So you do see this is very similar to the rates that you would see for a 1 to 4 unit DSCR, except this is a 20 unit multifamily property. Again, multifamily, residential in nature only, no mixed use component here possible on this one. So now we have our 30% down option, 70% loan to value. 75% is the maximum loan to value on this loan option for the purchase. You do see here that the pricing does get a little bit better. I'll put the other one here a minute for you. Refresh your memory. This one had 8.875 and 8.125, and this one has 8.625 with a $245 lender credit, and it has 8% as the lowest rate buy down option. Just almost 2 points on this option here. So now we have our cash out refinance option. 70% is the maximum loan to value for the cash out option. Again, very good rates here. 9.125 is giving us a lender credit of $1,470 with the lowest buy down option of 8.25%. And that is for a $980,000 loan. $1.4 million appraised value. And for the rate and term refinance, which is pretty cool, the rate and term refinance is going to be at the same loan to value as the purchase. So you can go 75% loan to value on this option at this loan amount. And you're looking at 8.75 costing $2,363 with the lowest rate buy down option of 8.125%, and that's costing just a little bit over 2.1 points. So 4 very good options here for this loan type. Again, the main thing that I want to stress here is that this is a DSCR option, which is going to look at this loan more like a DSCR loan. There's still, obviously multifamily components to the analysis here, and how they're going to look at the global DSCR and the individual units. But again, very flexible regarding population density, and that's the main thing that I want everyone to take away from this exercise here, is that this is a great workaround for those properties that may be in an area that may be a little bit more difficult to finance because of population densities. Now, I'm not saying this is the only thing this program is good for. It's a great DSCR program, very good rates, and if you go out there and compare some other rate options that have the income flexibility that this program has. Remember, there's not a full doc program. We're now doing a lot of the usual vetting that they're going to do for the commercial multifamily loans. So it does offer a lot of flexibility in that way, and also has very, very good interest rates, good pricing.
Did we do the cash out one?
Yes, sir. The cash out one is this one right here, and it is 70% maximum LTV on the cash out refi. These are our rates right here.
Excellent. All right, cool. Well, okay, we do got a question. Let me go ahead and take off the screen. And looks like just one question. If anybody else has a question, please drop it before we jump off. Jason was asking about bridge. Does this include any bridge rehab?
All right. So his specific question, in case any of you may be listening to us out there, are these programs bridge products with renovation cost finance? Do we have any agency financing available? This particular option that I'm mentioning is a full term 30-year loan. It is not an ARM. It's a 30-year fixed, which is something also very important to note, because a lot of times when you get multifamily loan options from a true commercial conduit, it is not going to be a full term 30-year loan. It's usually going to be a 5 or a 10-year term with either a 20, 25, or 30-year amortization, depending on how, what's the risk that they associate with the building, right? So keep that in mind. So you're going to get different rates when you have basically a balloon mortgage, which is with a 5-year or 10-year term. They give you a longer amortization, but after 5 or 10 years, the loan is due. And whatever is due at that point is due. That's basically what they call a balloon mortgage. You make payments for a while, and then after a certain moment in time, the full balance is due. So this is not that type of loan, and this is also not agency. And this is not a bridge loan.
And it's no renovation. So they do have a version of this with renovation, but obviously whole different ballgame on rates, right? So yes. Renovation for, full commercial 9 to 100 units, pretty difficult. It's going to be a pretty big task. So a little bit different ballgame, but there is one under these same parameters. And for the large multifamily agency, we do have some products there. Jason, I know you are on the team, but that's not what this is. Remember, Jose said there are some true agency products out there for large multifamily. This is a little bit different. Remember, the agency products will be full doc and a whole bunch of other stuff. This is DSCR. So this is a little bit different. It's not commercial. It's not agency. This is this new DSCR that we love living in, this new hybrid space. All right, we got one more question. Good. Coming in before the end. Are these mixed use, Jose?
Nope. Yep. We did touch on that.
Yeah.
Nope. This is full residential use only. There cannot be any type of mixed use component. No retail, no professional offices, nothing. This is all residential units.
Mm-hmm. And I think that's it for our questions. So let me just go ahead and wrap it up. Thank you, Jose. For everybody out there watching, thanks for tuning in. Remember, we have options for all these different loans, not just the conventional we went over at first, and not just the DSCR version of the commercial that Jose went over. We have the agency. commercial for large multifamily. We have the true commercial with the balloons for the large multifamily. But this hybrid right here that we just talked about is definitely something unique that we love to offer. And it fits right in line with what we do here at the Mortgage Calculator, where we specialize in programs that are outside the box, right? We can still do all the great conventional VA, USDA, FHA that you saw there. But this is where we really shine when we can do our non-QM programs, such as this hybrid DSCR with what would traditionally be a commercial product. So if you'd like to get a full quote, please get with one of our team members. We have over 300 licensed loan officers in 22 states for primary and second homes, and we can do these commercial multifamily loans in 44 states. So please get with us. You can email us at info@themortgagecalculator.com or just simply go to themortgagecalculator.com, which is down below, and we'd be happy to help you out. So thanks everybody for tuning in, and thank you, Jose, for the demo, and we'll see you guys tomorrow.
Thank you, everybody.
Thanks.